Well, a study by investment researcher Morningstar finding women in the US manage less than 3% of mutual funds exclusively and less than 2% of the more than $12 trillion in assets. This is the Moneymakers. I'm Bruce Whitfield. Tonight I speak to two women money managers, Grace Mahlomotja, who's a portfolio manager at Ashburton Investments, and Mia Kruger, who's a director and portfolio manager at Kruger International, about the South African context and whether or not women have a bigger say in the way in which your pension is invested, and if not, boy, don't you wish they did. Mia Kruger, take me through it, because there are not that many women in senior positions doing what you guys do.
That's right. You know, we as you see, it's quite a struggle to get some women on the show. But
it's never a struggle to get women on the show. Women beg to come on the show. We just choose very specifically.
There we go. So yeah, but I mean, if we look at how women manage money compared to men, like you just say, you probably want more women managing some of your money.
Let's get on to why we want that. But in terms of the number of women money managers in South Africa, tiny proportion?
Yes. Definitely is. I think it definitely has room to grow, but I think looking at where, let's say where I come from, for instance, we have like close to 32% of the investment group which comprises of women in my team.
But that's unusually high.
That's unusually high, but I think an organization that actually enables or facilitates for women, I think also plays a role in women being in investment-related roles. So I think
here's the vicious question. How do you stack up performance-wise versus other investment houses?
Well,
I haven't done the study.
Ultimately, I think it just boils down to, it's a team approach. I mean, where we stand as a house, it's not about, you know, ultimately we all debate vigorously as a team. So it's what do you bring into the table ultimately. So I think for us, that's what it boils down to.
But they're male-dominated environments, and like so many male-dominated environments, for women coming into those environments, it's often quite difficult to be taken seriously at first.
Very true, and it can be intimidating for a lot of women. Sometimes they get into the area, and I've had this discussion with Deborah Furr, who was one of the founders of Women in ETF, and she actually said when she, way back 20 years ago, when she came to BlackRock, she didn't actually have anyone to confide in and actually to ask questions to, and she often felt shy to approach the men who thought she should actually already know this. And I think that's probably one of the biggest issues. But number-wise, as you mentioned, you know, if you look at the CFA charter holders worldwide, even though we've seen women over the past, you know, 10 or so years increase, or the number of women increase in terms of the number of bachelors and masters and sort of honors degrees worldwide that have been, you know, earned yearly. The number in the CFA charter holders are still roughly between 17 and 30%, depending on which country you go to when it comes to the females.
In South Africa, roughly?
So South Africa, I tried to get the numbers, but I couldn't get it in time for the show. But it would be roughly, you know, sort of in those lines. But that is interesting, as you mentioned. I think the more interesting thing for me is not really the number. I think that'll happen naturally. Already, women are more, you know, more big earners when it comes to that, and 40% of women in the US already earn more than their spouse. So I think this sort of tendency will happen naturally.
Well, we look at it and say, is the environment then hostile towards women? Clearly not within Ashburton, because there's a concerted drive. Some men may be threatened by that drive.
I would say that is more a first-rand initiative. Most importantly, you learn to develop, I think, a thicker skin, because then obviously you seem to be much more subtle as a woman. So you actually have to put in more effort, I think, to send your message across. But ultimately, I think once you've earned your stripes, you know, then you get to be recognized, I think, as an individual, despite your sex, as a, you know, as an investment professional within our team. So I think
have you found the environment hostile, Mia?
Well, I'm probably a little bit more thick-skinned than most, and
but
I'm confident.
But both of you use the term thick-skinned, which implies you need a thick skin because you're discriminated against.
No, but it comes with time. I think for me, it really definitely came with time. You know, it's not easy. It's a very cutthroat industry, and I think most importantly, you're dealing with very, you know, quite a sizable amount of funds for clients. So you know that you're dealing with quite, you know, the stakes are definitely high. So I think you had to learn to not only be cautious but build a reputation for yourself as a person. So.
I saw some great stats out of the United States the other day about women in Fortune 500 companies, the performance of the companies they ran over a 12-year period versus companies run by men. There's a smaller proportion, there's less room for error. I suppose the errors could be amplified, but there was like a 250, 270% outperformance in the companies run by women versus those run by men. So immediately you go, I want to buy that ETF of women-run companies. Secondly, you say, well, if that's the approach there? Well, we should have more women running companies. Should we have more women running money? What do the stats tell you?
Well, yes, if you look at that, the numbers are quite interesting. The way women and men approach investments are quite different. Men tend to be more, rather more confident, I'd like to say.
Aggressive, we can use aggressive.
Well, that is, but not all men that I deal with are aggressive. So I think I'd prefer to say confident, and women are more goal-orientated. So when you end up, comparing what that actually leads to, and you look from the behavioral side, you find that men tend to trade more often than women. And in advanced cases, it ends up being up to 50% more often than women. And we all know what the studies show us: when you trade too often, you actually don't trade at the right times all the time, and you actually earn less than someone who has a buy and hold sort of strategy.
And you also erode returns in terms of the costs of getting in and out of positions.
There we go. So that's sort of one of the stats that came out. And also, when you compare that outcome, you tend to find that the women and the men in balanced portfolios, where they manage money, they hold roughly the same sort of equity exposure, but women have actually a better risk-adjusted return when it comes to that.
Why?
It's the feminine touch.
So you just undermined 50 years of women's liberation by making that remark. But what is it? I mean, what is it in the psycho? Because you look at, men will make an investment decision. We'll buy Anglos, $150. You can't go wrong. It was $600 18 months ago. We'll take Anglos at $150. Go down to 100, doesn't matter. We'll buy it at 150, and off we go. Gets to 130, we panic, we sell, and we wait for it to get to 100. It might never do that. That's me being male. How would a woman approach that?
Women would be more cautious when it comes to the initial sort of decision making, and then once she's made her decision, she probably has, she sticks to her guns better than a guy would, and that's just the tendency that comes from as I say, from the behavioral sort of drive. And that's an area which I really enjoy studying. So you tend to find that. There was another interesting question in a study done in the US where they asked women, and this came from the investor side, so not professionals managing money. They asked men and they asked women in a study who believes that they are less knowledgeable about finance and investing than the next person. And 55% of women actually said that they think they are less knowledgeable.
But that insecurity is a positive thing.
It ends up
I would think you'd work harder.
So I think that's the same, but the men were more confident. And we also know that in behavioral finance that overconfidence often leads you to make silly decisions.
Which is why in World War I they put men in the trenches, because they went over the top. Women would have thought about it and wouldn't have gone, you see, which explains so much. So investment returns then. When it comes to the investment process within Ashburton, you say a third of the team is made up of women. Is it a democratic process? I mean, everybody sit around the campfire singing Kumbaya and we take a vote on what we invest in. How does the process work?
It is a democratic process in that, I mean, we're very team-orientated, so everybody can challenge the status quo as it stands. So if I believe that there's no need for us to actually have net bank or Standard Bank within the house, I'm within my right, being part of the resources team, to actually challenge my peers. And it's very important not to take things personally. We vigorously debate within the meeting and still be able to say after the meeting you can still have coffee with your peers and not take it personal, because ultimately it's all about performance, so that we are able to perform well against our peers. So you learn to divorce your feelings, I think, as a person from being a woman or a gentleman, but ultimately it's all about the greater picture, which is
Are you treated differently in that investment group?
I don't think so. I think personally I have grown through the ranks. I've been through the dealing desk of RMB Private Bank, and now one is within Ashburton. So I think I've learned to see how my peers are actually working and be able to grow from that. But I think ultimately you are constructively criticized as a person, and you need to be able to take it up the chin so that you're able to bring a much more better proposition if you're not bringing your A game to the table, because ultimately, like I said, it's all about performance. Despite the blend of the team or how we look like, ultimately at the end of the day, how we rank according to our peers.
How do you rank? You've dodged that question once.
we work in progress. I mean, like, you think about our 5-year performance. We've returned, let's say, our equity portfolio. We've done 20%. I mean, the sector industry is 15%. So I think over a 5-year period, of which we define ourselves as long-term investors, over the long term, we've done phenomenally well, I think. And over a 3-year period, we're still also north of 20, just slightly 20%, and also slightly above the sector average. So I think we've done fairly well. We do not rank ourselves within short-term performance, because we look at ourselves much more in the longer horizon, 3 to 5 years, and that's the kind of investors I think we attract as a house.
Okay, so it's about then being just a little bit more sanguine, a little bit more thoughtful about the process, and once you make a decision, you don't change your mind.
Well,
Too often, unless the facts change.
If the facts change, so you always need to be informed. But I just think that, you know, that sort of approach is one of the broad sort of themes that comes through when you look at look at it as a whole. But I still think that you know, it differs from person to person. And when you, I heard, you know, how everyone's being treated with respect, and you have to prove yourself. But I think that happens for men as well. So that happens whether you're a male or a female.
It comes with time, I think.
So, but I think as a female, I've actually always felt respected in the industry, and I've actually not had big issues considering that I'm a female and a male.
Why is the industry then not drawing more women into it?
I think flexibility is very important, and it boils down to organization, like I said. I mean, I think...
With flexibility, explain flexibility.
Flexibility in that, I think, working hours. I think that's very important to say that I think as women, there comes a point where you want to start a family and so forth, and flexibility to still be able to work at home at some point in time. And if you're not able to get into the office, say 7 o'clock, which is roughly the time that most of us get into the office. So it becomes a, you know, a juggling act, I think, for women ultimately. Flexibility from an organization point of view, I think, plays a key role in whether women can be in such roles going forward.
Does the industry need to work smarter in terms of finding ways, Mia, to incorporate the skill set brought by women, the different way of thinking, the different approach to investing, and say at point some women will want to have a family, might want to take some time out or go flexi time. Is it even feasible?
Well, I think if you consider, you know, the tendencies of this industry, and if you consider any professional sort of industry for that matter, it's very much, you know, it comes down to the person who is in the job and what their specific sort of goals are.
Do women need to make bigger sacrifices in this industry for their making bigger life choices than perhaps men do?
I think so.
Well, that's probably throughout life, because if you've got a professional job and you have to work 8 hours a week or 8 hours a day, and you're a woman and you want to have kids, it's not something your husband can take over from you. But I don't think that's, you know, I don't think that's an issue for all women. I think it's only for certain women, and people that want that sort of flexibility all the time probably won't end up in a position where they're managing money.
That's a tough one. There we go. Mia Kruger, Director, Portfolio Manager at Kruger International. Grace Mahlomotja, who's a Portfolio Manager at Ashburton Investments. They're the guys who block up the traffic between 6 and 7 in the morning. There'll be more issues discussed this evening with the producers, coming up with some cunning ideas for the next program. Till then, good night and goodbye.